Ladies and gentlemen, good day and welcome to the Knowledge Marine and Engineering Works Limited H1 FY23 earnings conference call hosted by HIM Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and one on their touchtone phone. To remove yourself from the queue, please enter star and two. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadin Rani from HIM Securities. Thank you, and over to you, sir.
Thank you, Faisal. Good afternoon, ladies and gentlemen. Thank you for joining the Knowledge Marine and Engineering Works H1 FY23 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Sujay Kevalramani, CEO, and Mrs. Kanak Kevalramani, Director and CFO. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature, and the actual results may vary from these forward-looking statements. I would now like to hand over the call to Mrs. Kanak Kevalramani to commence by sharing her thoughts on the performance and strategic progress made by the company, along with its H1 FY23 financial performance. Thank you, and over to you, ma'am.
Good evening, ladies and gentlemen. I welcome you all to our H1 FY23 investor conference call. Our financial statements and presentations have already been made available on the exchanges and on our company's website. I hope you all had the opportunity to pursue the same. Before discussing the performance, I would like to give a brief overview of KMEW that will provide better understanding of our line of business. KMEW is in the business of dredging and other key port-related ancillary services such as pilotage services, conducting hydrographic surveys, security or patrolling services, ship mooring services, repair or refit of marine crafts, providing technical solutions for maintenance and operations of vessels, and shipbuilding. KMEW is one of the premier dredging companies in India, with presence in eastern and western coasts of India. We have a strong order book position, providing revenue visibility for immediate to medium term. We are proud of our in-house design strength, which helps us in getting success in bidding process due to lower project cost. As of now, the company has a strong order book of rupees 209 crores with an average tenure of more than 2.5 to 3 years. On our fleet strength, in addition to the existing fleet, we have added River Pearl 11, which is deployed at Mangrove Fishing Harbour, and River Pearl 12, which will be used for future contracts. Coming to our first international contract at Myanmar, wherein we assisted the Government of India to build the strategic port at Sittwe, is expected to complete the capital dredging by January 2023 and start the maintenance dredging thereafter. During the year, we have also won a contract worth rupees 68 crores from Dredging Corporation of India for carrying out rock capital dredging at Mangrove Fishing Harbour. As regards to industry, the Indian port infrastructure is expected to grow in the long term, thereby supporting various dredging industries. We are also optimistic of emerging opportunities coming out at Fishing Harbour. In sync with the industry outlook, we also anticipate our future outlook to be bright. With a healthy order booking status and with numerous more projects in the pipeline, we are confident of medium to long-term growth story. We also have strategic plans to enter into new business segments like developing fishing harbors, entering into national waterways works, etc. On to our financial performance, KMEW has delivered a robust performance in H1 FY23. The revenue from operation increased by 541% to 122.7 crores. EBITDA rose to rupees 35.2 crores with EBITDA margin of 28.6%. PAT rose to rupees 23.8 crores with PAT margin of 19.4%. We have a positive cash flow of rupees 14.2 crores, a testament of our operational efficiencies. Our return on equity and return on capital employed for H1 FY23 is 77% and 79% respectively. We are also planning to raise rupees 39.6 crores by issuing 5,65,000 equity shares at an issue share price of rupees 700 per share on a preferential basis. The preferential issuance is subject to necessary other approvals and shareholders' approval at an EGM, which is scheduled to be held on 9th of December 2022. The strong financial results will serve as a new benchmark for us. Meanwhile, we continue to explore new business opportunities, capitalizing on our core service competencies. We are also planning to improve our operational efficiencies. We trust these positive measures will yield strong financials in future and thus keeping stakeholders' interest on priority. With this, we close our opening remarks and will open the call for an interactive question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Sir, I would like to know what is your capex plan for next few years, and as you are raising 40 crore on preferential basis, you may give this right issue to existing shareholder at this price. Why you choose this route to give money to them at 700 rupees? And what about margin guidance for next few years? These are my questions.
Sir, can you say your name again? I missed the name, sir.
Ravi Naredi from Bhilwara.
Raviji, we chose the preferential issue because that was the board's call. We are raising 40 crores that is going to be spent over a period of next 1.5 years. We have made several bids to the tune of 500 crores, for which we are anticipating that the order flow will come in within the next 1.5 months, and we will have to spend that money to immediately procure the dredgers to be deployed in these orders. And margin guidance will remain same, approximately 30% in the coming future, because that is the benchmark we take when we make our bids.
And this capex plan?
Sir, we are looking to procure 4 dredgers in the next year. So this money is going towards buying of dredgers.
And what will be the cost of 4 dredgers?
Sir, it will be close to 55 crores, sir.
Cost 55 crore. Okay, sir. One more question. Out of the 209 crore order, how much order will be completed in next 1 year? Because in your investor highlights, you have given 5-year order, 7-year order. So what is plan for next 1 year order book for the company?
Sir, out of 209 crores, I believe 130 crores, 130 to 140 crores will be executed in this year. Balance will overflow into the next year. And for the next year, we have already made bids, okay, for which we will know the results within a month and a half.
Okay. And in one and a half month, are we expecting a big orders?
Sir, that we'll keep you posted as and when
No, I'm not asking in the numbers, but are you thinking some more or lucrative order will be received to the company?
Sir, at this stage, I can say that we have made bids for 500 crores worth of orders, and we are still in the process of making another bids, and we have a good hit rate in the past. So, we should be declaring once the orders are received, sir.
Okay. And what was our success ratio in last 1 year? How many orders we bid and how many we won?
Sir, close to 70%, but I would say it has been more than 50%.
Okay. Thank you. All the best.
Thank you, sir.
Thank you. The next question is from the line of CA Garvit Goyal from Invest Research. Please go ahead.
Hello. Am I audible, sir?
Yes, sir. Please say your name again, sir.
Garvit Goyal, sir. CA Garvit Goyal.
Okay.
Okay. Yes. So I was continuing with the last participant only. As you mentioned in your investor presentation, the projects underway are worth rupees 209 CR. So my first question is, how much out of it do you expect coming in second half, sir?
Second half should be approximately 80 to 90 crores.
80 to 90 CR will be in second half, you're saying?
Yes.
And from 1 year from now, as you mentioned, 130 to 140 CR.
Correct.
Okay, understood. And sir, actually, in earlier con call, you mentioned.
I would like to mention one more thing. There are certain orders under execution in which variation quantities are also there. So the quantities may increase and the order book may increase. These approvals are under process with the ministry and it may come as the time flows by. But I can give you the number of 80 to 90 crores for the second half right now.
80 to 90 crore, and in first half only you did 125 to 130 CR.
Yes.
And in last con call, actually you mentioned this 125 to 130 will be for entire year, I think.
Sir, that is what I like to say is I will tell you what is in front of me right now, and as and when the order increases of the quantity varies and I get the orders from the ministry, only then can I confirm. It's been 6 months since we last spoke, so much happens during that time. So right now that is what I can guide you with, what is in my hand.
Understood, sir. And what will be our sustainable EBITDA margins, sir, going forward?
Sir, you can consider 30%.
30% will be sustainable one. And what is the reason for decline in this quarter, sir? Because I think on an historical basis, these are the lowest margin we had in this first half.
Sir, two reasons. Actually, one of our vessel, River Pearl 8, which was in Myanmar, had to stop operations during the monsoon period, and the work started again in October. As per client's instruction, the work was halted during the monsoon season since the measurement of the work was not possible in Myanmar. So there was some idling of the equipment. Secondly, there is a 2.5 year and a 5 year dry dock of the vessels that happened. So River Pearl 1 and River Pearl 4 were in dry dock for a period of almost a month. So during that period, the revenue goes away and the expenditure for dry dock repair and maintenance starts. So all three of them got aligned.
Understood, sir. Understood. That's all from my side, sir. Thank you very much and all the best for you.
Thank you, Gaviji.
Thank you. The next question is from the line of Anay Mittal from Invest Research. Please go ahead.
Hello. Am I audible, sir?
Yes, sir. Please say your name loudly, sir.
Anay Mittal from
Yes, sir.
Yeah. Sir, when I go through your investor presentation, I see a note on a contract by Dredging Corporation of India for Mangrove Fishing Harbour, right?
Yes, sir.
So you also do subcontracts from Dredging Corporation of India, is it?
Sir, Dredging Corporation of India is a consultant for Department of Fisheries. Okay. So the work has not been awarded to Dredging Corporation of India. We are the contractors. Dredging Corporation as a consultant has chosen us to execute the work. But yes, we are, of course, we don't mind being a subcontractor to Dredging Corporation, which is a government entity at the end of the day. So we work for the government, but for this particular project, Dredging Corporation of India is a consultant. they bill a margin of 10% over and above our bill for supervision works.
Okay. Sir, and another important question, not precisely on these numbers and stuff or your guidance, which are very clear. Sir, how in this industry you are working more efficiently than your competitors? Right, that is one question which we want to understand, sir. If you can throw some light on how that efficiency coming in, is it like some expertise which is not easy for others to gain? What is your competitive edge, sir?
Sir, we have a team which has altogether put in more than 60 years into the dredging field, sir. And my 17 years have gone into this, and we have executed contracts all of.
Okay. Okay.
This is the operator, so we are not able to hear you.
Am I audible?
Yes, Mr. Mittal, you are audible. Ladies and gentlemen, please hold the line while we reconnect the management. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you. Mr. Mittal, please.
Yeah. So I think my question was, unanswered.
I will answer your question. Can you hear me?
Yes, sir.
Anaji, we have combined between 55 to 60 years of work experience in the promoter group. Then we have a second tier of people who are senior management working with us, who among themselves have more than 100 years of experience in dredging. Now, we have collected, within this experience, what we have collected is the type of soil that we will encounter from Gujarat till West Bengal, and we do intensive studies before taking up any contract. Basis these soil studies, we are able to take a judgment call on the type of equipment that needs to be deployed, which gives the highest amount of production. If these two calls are made correctly, there is very, very, very little or rare chance that your margins may deplete. So we do that correctly, and we have been doing this correctly. Also, we have kept our capex very much under control and OPEX very much under our control. So there are no leakages in the system. That's how we've been able to do it better than our competition.
Okay. Sir, when I look at your top line for, say, last 3-4 years, it's FY20 you did around 25, 23, 25, I think, and FY21 it was around 33, correct? And FY22 60, and now we are seeing already in half year 122, correct? So what is that? Is there any change in dynamics in this industry which is giving you such a growth potential? And how do you see this industry for next 3-4 years, sir? If you can throw some light on this.
Sir, we are growing at a good pace. All we are doing is there are entry barriers in these contracts. As and when we get qualified for work, we are submitting our bids. The industry is worth good 10 to 12,000 crores per annum, and that will grow only over the next 2 to 5 years. Because as inland waterway jobs open up, dam dredging opens up, all these things are happening. So we are not looking for any huge stake or 1 to 5% stake of it. We are only trying to have a calculated growth and execute contracts which we can execute. We were not able to make bids of 500 crores last year or the year before, but we were able to make bids of 100 crores the year before. So we did that. Now we are able to make bids of 500 crores because we have done successfully executed certain works and we have got completion certificates for those works. So we are able to participate. That's how the growth story is going, sir.
Okay. Okay, and you are seeing this order inflow very strong, and you are seeing that the industry per se has a very good future, at least in next near to midterm. Is that right?
Yes, sir. We started with a single boat in 2017, sir, and we have grown to Riverpal 12 now in the last 5 years. So we are looking to grow, we are looking to add vessels, we are looking to add contracts and continue this growth.
That's great, sir. Sir, you also spoke about river dredging, which is going to come up and stuff. So if you can give us some info on that, sir, in India, I think. That's what you mentioned, right? Yeah.
Contracts worth about 1,000 crores are going to be bid within the next 3 months. Government of India has decided that Dredging Corporation of India be appointed as a consultant for river dredging works, and Inland Waterway Authority of India has appointed them as consultants. And now these tenders are under preparations, and this will come out in the next 3 months, which will be on National Waterway 1 and National Waterway 2. We will be actively looking to participate in these contracts.
Okay. And how would be the margin profile differing when you consider a dredging in a river vis-a-vis the other, your usual business, sir? Is there any drastic change in the process?
We only bid for contracts which have at least 30% margins. We evaluate that on day one and only then pursue those opportunities. There is no point in making the efforts for lesser margins, sir.
Means my question is, like, is that you can be more efficient there and hence more margins, something like that, sir?
No, sir. The margin should continue, sir, the same. There won't be any higher margins or anything because they evaluate the cost and the estimate basis the current market rate. So they will take estimates from the current bidders and prospective bidders and accordingly prepare the estimate for the contract or the tender. So they won't vary much.
Okay. And finally, what in terms of market share, can you throw us some light, sir? Like you already told, I think this market is around 12,000 crore a year types, right?
Yes, including the capital and maintenance dredging done by all major ports, minor ports, naval establishments, shipbuilding and PSUs, ONGC, inland waterways, dam dredging, all this put together adds up to close to 12,000 crores. With 122 crores as our top line, we are nowhere there, sir, in terms of percentage.
Got it. And in terms of capabilities, sir, I know that you spoke about previously you were unable to bid for projects beyond 100 crores, and now you have started bidding. So, do you still have any limits in terms of the size of order to which you can bid? Because of substantial big players with great experience, or you have no limit in terms of bidding?
Sir, today we are eligible to bid for contracts with a value of 200 to 250 crores. Once we execute Sitwe contract completely, we will be able to bid for contracts worth 400 crores. So this is a step up. Slowly and slowly will be a step up.
And how usually it happens, sir? The time period would be like maybe 18 to 24 months to prove that you can do and then move forward. Is that how it works?
Sir, this is followed as per the CVC guidelines, Central Vigilance Commission guidelines. Okay. If the work is valued at 100 crores, so the prospective bidder should have executed 3 works for 40% of the contract value, 2 works of 50% of the contract value, or 1 work of 80% of the contract value. Then if the work is of 5 years, this is annualized. So depending on that, we get qualified. So currently we have the largest completed or ongoing work which is substantially completed is Sitwe for about 145 crores, which we have done. So including the GST. So that is what we are using as a benchmark for our other jobs which are more than 200-250 crores.
Makes sense, sir. Sir, that's what we had. Thanks for your time, and I hope we continue bidding for good contracts and keep winning and keep building the top line, sir. Thank you. All the best.
Thank you for the support.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead. Mr. Chheda, your line is in talk mode. Please go ahead with your question. Mr. Chheda, please unmute your line from your side if muted. As there is no response from the current participant, we'll move on to the next question from the line of Guneet from CCIPL. Please go ahead.
Hi. Most of my questions have been asked by the previous participants, but I would just like to congratulate the management for the growth that we've seen over the last few years, like almost doubling every year, and this year even more than that. So, going on that, what should be our, what kind of top line and bottom line can we expect for the next year? And maybe you have some number in 2-3 years. And currently we have an order book of around, say, 200 crores. So by the end of the year, what kind of order book are we targeting as of now?
So Guneet, in terms of order book, we are looking to have an order book in excess of 400 crores in the current year. We are trying to bid for that. Numbers for the next year, I won't be able to give you an exact number where we will stand, because like I said, the quantities will vary and we will be able to execute those within this financial year. So that we will have to wait and see. For the next year, we are definitely looking for a growth in terms of at least 10 to 15% over the numbers of current year.
All right. So, previously we were looking at growth rates of around 100% yearly. So for the next year, the ballpark that we have is around just a 10 to 15% growth. That's what you're saying, right?
Correct, sir.
All right. And the 5 dredges that we are adding, how much can that add to our top line?
So, like I said, the order book that we are looking to build over and above our current order book of about 400 crores, that will be executed using these dredges.
All right. Got it. And my last question would be, we see that the margins for last year were around 59-60%, and they are currently about 28%, and going forward, you have said that they would be in the tune of 30%. So, what is the major reason for this decline in margins?
Sir, can you repeat your question, sir? I thought you said 15% EBITDA. I never said 15% EBITDA margin, sir.
No. It was around 60% last year,
yeah,
for FY22, and it has come down to about 30% right now, and that is what the guidelines have been for future as well.
Correct.
So, can you note down any specific reasons why we have seen a decline in margins? Has there
We will maintain at least 30%. They may increase, but we'll maintain. That is what I'm trying to say. We'll maintain at least 30%. And the decrease, like I explained, was because of the dry docking of 2 vessels and the idling of one of the dredges during the monsoon period as per client's instruction.
All right. So going forward, we can expect at least 30% and upwards of that.
Correct.
That's what you're saying. All right. That's all from my side. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Avinash Gaurashankar from Profit Mart Securities. Please go ahead.
Yeah, I think I would like to congratulate the entire team for an excellent set of numbers today. I think numbers are much better than what you all had promised last time. So I think let the momentum continue. I've just got 2 questions because I know there are a lot of people in the queue. First of all, I want to understand, what is the status on the Myanmar order? How much of this order still remains to be implemented? If you could give us some color on this.
Welcome, Avinash ji. Thank you so much. Thank you. Really appreciate. About 80 crores of the order is still balanced, and there can be an additional order of 2 years, which is a possibility in our contract, which will be known only once the first 2 years are completed. So currently about 80 crores is balance.
So this 80 crores will get commissioned in the second half of this financial year, that is for FY23?
Not all 80 crores, sir.
Okay. So some part of it will still spill over for FY24 unit. Hello?
Correct. Hello?
Yeah. So another question is, Sujay, I wanted to understand, last time I think you all had mentioned, that you all were very keen on working on a shipbuilding kind of facility also. Like you do work with a company called Synergy Shipyard, which is your, which is the company which builds ship for you. So now any further developments to that? Because I believe, a lot of discussion had happened in the last time's conference call. So if you could share some, inputs. You said that in the next 3 to 6 months, some development will happen and you all will be updating us. So any kind of development which has currently happened, anything of, to what was mentioned last time, like?
Sir, we are actively looking for contracts of shipbuilding in terms wherein we are going to make at least 30% margins. We haven't come across any such opportunity till now. So we are not doing any kind of capex or any kind of spending on that. We have an understanding with the shipyard for doing shipbuilding for our own vessels, which we are adding 2 vessels on an annual basis wherein we are getting contracts. We were expecting we were exploring certain opportunities with Garden Reach Shipyard wherein there was an overflow of their orders. But since the margins are not what we are getting right now in our dredging contracts and other contracts, so we chose not to go ahead with such works up till now, sir. So once we have an opportunity wherein margins are good and we are not going to end up deploying capital at a place wherein margins are less, only then we will enter such a field, sir.
Okay. One last question, Sujay, is, you all had also mentioned that you all were planning to acquire some cutter suction dredgers, which is basically a more sophisticated kind of equipment. So any update on that? Has the company acquired, or possibly we will be seeing some further development on this aspect maybe in the coming quarter?
Sir, we shall acquire the dredgers as soon as the work orders are placed on us from the bids that we have made. We already have plans and we have raised the capital. We are going to raise the capital for the same by December. So yes, coming quarter, or coming 6 months, you will definitely find such dredgers in our fleet.
Okay. I think thank you very much, Sujay, and all the best to you and your entire team.
Thank you, Avinash.
Thank you. The next question is from the line of Abhishek Singhal from Naredi Investments. Please go ahead. Mr. Singhal, your line is in talk mode. Please go ahead with your question.
Hello, am I audible?
Yes, sir. But there is an echo coming, sir, from your line.
Hello, am I audible, sir?
Yes, Abhishek ji, boliye.
Yeah. Sir, in H1, we achieved 120 crore revenue. So how much revenue we are expecting to come in H2? And in last Concall, you said that EBITDA margin is at least 40%. So why you reduce margin guidance from 40 to 30%?
Sir, in terms of top line for the second half, currently I cannot commit on a number because there are certain varied quantities under approval. So I can give you a ballpark figure of 80 to 90 crores for the second half. The margins for the first half have reduced because of 2 reasons. 2 of our dredgers are in dry dock and one of the dredgers was idling during the monsoon period, sir. So that is why the margins have reduced, but we will ensure going forward that minimum of 30% margins are met.
Okay. And the last one question. Why you are not able to generate revenue from port and ancillary services? Because in H1, 98% revenue generate from dredging business.
Yes, sir. I didn't understand, sir. Can you say it again?
Sir, in H1, our main revenue, 98% revenue generate from dredging business. But revenue from other ancillary services is very low.
Sir, because ancillary services are giving that kind of revenue only, sir. Our top line has increased. Our revenue from dredging has increased. That is why you are comparatively looking at a ancillary service revenue of 2.57 crores as less. But most of our equipment, so Riverpal 1, Riverpal 3, Riverpal 5, 7 and 6 are only ancillary services craft. Riverpal 2, Riverpal 4, Riverpal 8, Riverpal 11 and 12 are dredgers. So most of our fleet is dredging fleet now. That is why the dredging revenue has substantially increased. And ancillary craft has remained the way it has. Those are fixed price contracts, sir. The revenue will continue to be the same, sir. And it may have reduced a little bit in the first half because of Riverpal 1 being in the dry dock for almost a month.
Oh, okay, sir. Thank you so much.
Thank you. The next question is from the line of CA Garvit Goyal from Invest Research. Please go ahead.
Thanks for the opportunity again, sir. Actually, listen, you guided around 10 to 15% CAGR growth going forward after FY23. Is it right, sir?
Sir, presently I would like to commit to that only, sir. I cannot say much more, and then I am a little bit conservative when I say these numbers always, sir. So that is what I would like to guide you by minimum right now.
Okay, understood. Because as you mentioned, the industry growth and upcoming projects you are bidding for. So looking at all these, I think it should be more than that, obviously, right?
Sir, you have seen the past, sir. You have a track record of the last 7 years, how we have grown, but we keep a number in mind and then we fix our revenues and profits basis that, and then we try to extract the most juice from our equipment as far as possible, sir. So
Okay.
it always is a good number, but when it comes to committing these numbers to you right now, that is what I would like to commit to.
Okay, understood, sir. Thank you, sir. That's it from my side, sir. Nothing.
The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. On the mangrove project, how much of execution will happen this year?
Sir, about 60% of the work will get executed this year, sir.
And that's the 60% of the 60 crores.
Correct, sir.
And any more scope of work available there?
Sir, the quantities will again, subject to approval from Government of Gujarat. There are certain varied quantities which are under approval. So initially we had the contract quantity was around 110,000 cubic meters. There is a variation of almost 10 to 15% in that as well.
This is a project on charter, right? You have taken an asset on charter.
Yes, sir, we have taken the vessel on hire from our partner itself.
Okay.
Joint venture partner in this work.
Okay. My last question is incrementally, what are your thoughts on chartering versus own assets, and incrementally, how should we look at your mix? Will there be any incremental chartering, or we'll continue with our own assets? Is there any thoughts there?
Sir, we would like to own 60% of our equipment and we would like to charter in about 40% of the equipment, so that we are in control of the projects at all point of time.
Where are you today on this mix?
Sir, today we stand close to about 85% of our equipment that is owned and 15% at charter.
Okay. And so the margin differential between chartering and own equipment would be?
Sir, in terms of owning our own equipment, over a life period of the equipment, the margins are better. In terms of charter, the margins are, in short-term contracts, the margins are okay, but in long-term, the margins are not better as compared to owning of the equipment.
How different are they? So if you are a 40% margin company by owning your assets so far, when you charter, what will be the margin number percentage?
Sir, it will be less by at least 5 to 7%, sir.
But the asset number will be zero?
Yeah.
Okay. So basically today you are 35% own equipment and you eventually want to head towards 60%.
No, sir, 85% own equipment, sir. 85% own equipment, 15% charter today. Want to go to 60% own equipment and 40% charter.
Yeah, okay. I wrote that. Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Janak Lotwala, an individual investor. Please go ahead.
Hi Sujay hi Kanak ji. Thank you for taking my question and congratulations on great set of numbers. So sir, my first question is around the current cash position. How much cash do we have on the books? And we are also raising some funds through the preferential issue route. So how do we intend to use it in the future? That is my first query, and I have a follow-up after this.
Sir, I'm sorry, sir. Can you say your name again, sir?
Janak Lotwala.
Janak, sir. Sir, we currently have. I would like Kanak to answer this question. How much cash do we have on our books?
Hi, Mr. Janak. So we have 35 crores of cash in our book as on date. Plus, we will be adding almost 40 crores from preferential allotment. So we would be having 75 crores of cash in our books.
And how do we plan to use them, or what is our capital allocation for next couple of years on this?
So as Mr. Sujay has rightly said that once we get the contract, we would require 55 crores of cash to buy the assets for that contract.
Okay.
And balance will be used to start the work. We always need the working capital. So balance will be used for the working capital.
Got it, Kanak, got it. My second question is around the port ancillary business, which is around 2 to 3% contributing to our revenue. So, Sujay, my query over here is what kind of scalability do you see in this business? One. Second, how much it is it resource intensive in terms of cost, manpower, the funding, etc. Because this query is coming from the perspective of that we are having an order book, for instance, of 9 crores in one of the ports, which is spread over the duration of 7 years. So do you see this as a strategic focus area economically and in fact strategically? And if you can throw some light into this segment.
Sir, these ancillary craft businesses allow for long-term presence in every port, sir. So they are good margin businesses. Once we have one of our craft which is present with the port, that means our linkages or connection with the port continues. That is where we are first in. We always get to know which are the contracts coming up, which are the dredging possibilities that will happen. And that does not give us any overhead to spend for marketing or sales in this. So we always want to have these contracts, and such crafts will always support us, will always be a helping hand in our dredging contracts that will happen in that port. Currently, we have made a bid with Kandla Port. In Kandla Port, we have 2 mooring boats and a service boat which is going to be there. So presence, and there will always be synergy in executing the 3 contracts together. So we would like to grow in this ancillary craft business, which gives us long-term presence for our team to be in such ports.
Got it. And any guidance on the resources that we need to commit in delivering the ancillary services in terms of manpower and cost, or difficult to comment on that?
Sir, not a lot of manpower or cost goes once the crafts are built. So the capex is initial. After that, operational costs are very marginal because fuel is passed through in this. So we get fuel from the government. So that is completely not a cost. Only marginal cost, which is approximately 2 to 3%, which is manpower cost of the contract value, which goes in monthly.
Got it. So maybe we can look at it as a pre-sales or a pre-development exercise before we get into the larger contracts of dredging. This is what you intend to say? Got it.
For a long-term duration in our team.
Got it. And my final query is, any plans to migrate from
casing to explain, there is no risk in such, very little to no risk in such contracts, because execution is very easy and the contracts are long-term duration, so risk is very limited.
Got it. So this will be a higher margin business than in that case.
No, sir, dredging is always a higher margin business as compared to ancillary craft. Competition is also less in dredging as compared to ancillary craft business.
Got it, sir. Got it. And my final query is around any plans of movement from SME to main board?
Sir, next year shortly we have plans to move to the main board.
Okay, Sujay and Kanak, thank you for the wonderful work you are doing. Happy to be part of it. Yeah, thank you.
Thank you, sir.
Thank you. The next question is from the line of Ankit Agarwal, an individual investor. Please go ahead.
Yeah, am I audible?
Yeah, boliye Ankit ji.
Sir, congratulations on the good set of numbers. Just have one question, sir. We got the Mangrol contract in the early June, it was reported. But after that, it's been almost like 6 months, sir, but we haven't received any big orders as such. So is there a concern on that, or how do you see that, sir?
Sir, we want to move at a certain pace. Just securing orders is not the only thing that we need to do. We need to have a good execution plan for securing orders and after that executing them. So during the monsoon, dredging is an activity that slows down. So none of the tendering and award happens during the monsoon period. Only after the monsoon such works will happen. Also, for the current year, we were well placed not to take any further orders. We wanted to plan for next year. So accordingly, we were placing our bids.
So, sir, just as a follow-up question, now that the monsoon season has ended, so in the next 6 months, are we planning to bid for any dredging or any other kind of similar projects?
Sir, we have already made bids worth 500 crores right now, which are under evaluation. We are planning to bid for another 200 to 300 crores worth of projects, which will convert into an opportunity, which opportunity will convert into a business. So we are looking to do that this year. We have already done for 500. We are looking to do another 200 to 300 crores this year.
Okay. Thank you, sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Prashant Sisodia, an individual investor. Please go ahead.
Thank you for the opportunity. My question is, as we have mentioned in investor presentation, the company is entering into sand mining segment.
Mr. Sisodia, the audio is not clear from your line. Please use the handset mode.
As company has mentioned in investor presentation that it is entering into sand mining segments and fishing harbor segment. So, can you share a few details and expected revenue contribution from the same?
Sir, we are exploring sand mining business in certain contracts which are coming up in Rajasthan that will convert into an opportunity. The tenders are already out and will convert into an opportunity once we succeed with the bids. They have good high margins. So revenue right now from the current year, we are not looking for anything. We'll look for it in the next year itself.
Okay. Okay, thank you.
Thank you. The next question is from the line of Vivek Mehta from Blue Ocean Capital. Please go ahead.
Congratulations on your performance. Just one question. Who would your key competitors be, and are there any in the listed space?
Sir, our key competitors in India are Dredging Corporation of India, Rock and Reef, Sahara Dredging, and Reach Dredging. In the international market, there are 4 players: Vanord, Boskalis, Dredging International, and Jandener. Boskalis is a company which is in the listed space, and Dredging International is another company which is in the listed space on the European market.
Okay, thank you. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Janak Lotwala, an individual investor. Please go ahead.
Hi, Sujay. Since we are discussing about the international business, just wanted your quick take on, are we planning or are we in discussions with a business which is of similar ask of that of Myanmar in adjacent or other ports or other geographies apart from India?
Sir, one of our bids that we have made is for a project in Maldives, which is being tendered by Ministry of External Affairs currently.
And any more insights that you will be able to share, or is it right now?
Unable to say more on that current state, sir, because the project is of relates to national security and not much I can give on that, sir.
Got it. Understand, sir. Thank you for taking that up. Yeah.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So when you are guiding for an EBITDA margin of 30%, so what are the reason for the high margins that we have done in last few years? Because our margins are almost around 40%.
Sir, the current years, the margins have reduced because our vessel, which was in Myanmar, Riverpearl 8, was asked by the client.
So that I know, sir. Now now maybe going ahead also you are guiding for 30% kind of an EBITDA margin.
Correct.
Yeah. So is there any change in the product mix, or is there any reason for giving a lower guidance for EBITDA? Because past we have done margins of almost 40%.
Sir, I'm saying that it will be a minimum of 30%. It is not necessarily exactly 30%, but it will be a minimum of 30%. So it will be in excess of 30%.
So incremental orders that we are winning, so in that what is the potential margin, sir? At what margins we are winning that orders?
The minimum of 30%. We are bidding wherein our margins are minimum of 30%.
Okay, so incremental margins could be because of the operational efficiency.
Correct.
Okay, sure. So much, sir.
Thank you. The next question is from the line of Guneet from CCIPL. Please go ahead.
I just want to ask regarding the orders that we have applied for. So we have 500 CR worth of orders that we are looking at right now, and you mentioned 200, 300 more kind of orders that we can book in this year, right? Apart from that.
Yes, we can bid for another 200 to 300 crores.
All right. And so potentially we can bid for around 800 crores of orders by the end of this year, right? That's what we're talking about.
Yes.
And looking at the 50% win rate that you mentioned about, so we can look at winning around 400 CR of order by the end of this year.
That is what we will be targeting, sir.
All right. That's all from my side. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Participants, to ask a question, you may press star and 1. The next question is from the line of Chandru, an individual investor. Please go ahead.
Hi, sir. Can you throw some light on what are the thought process behind the ship scrappage business and the fishing harbor business, and how are you going to approach it, sir?
Sir, kindly repeat the question slowly, little, sir.
Sir, can you throw some light on the fish harbor business you are looking at the Gujarat market and ship scrappage business, sir?
Sir, ship scrapping business we evaluated over the last 3 to 4 months. We found that it is a fluctuating market and not very sustainable margins are there. So we are not looking further unless our margins of 30% are met in that business. So for shipbuilding and ship scrapping business, we are awaiting wherein we get an opportunity that we can convert into a business only post ensuring that 30% margins are there. Only then we'll deploy our capital in that business. In terms of fishing harbour, there are 3 other projects which have been tendered by Gujarat government, and we are negotiating with those players who have secured those contracts for dredging works in fishing harbours at Porbandar and Veeraval right now.
Okay. Are we targeting any outside international projects apart from our government of India? Anything private projects, sir, we are targeting for?
So we have participated in one bid of Ministry of External Affairs in a project at Maldives.
Okay. That is the only project now you are targeting, am I right?
That is one of the international projects that we are targeting right now.
Okay. Got it. Yeah, okay. Thank you, sir. That's all.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Ramadhan Rane for closing comments.
Thank you, Faisal. On behalf of HEM Securities Limited, I thank KMEW team for giving the time we spent on this call and responding to all the queries in a detailed way. I would also like to thank all the participants for joining this call. Now I would like to hand over the call back to the moderator for the final remarks.
Thank you. Ladies and gentlemen, on behalf of HEM Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you, sir. Thank you.